Hello, welcome to Lunch Money. We are the online and social media home for special situations, workouts and capital raising professionals. My name is Nick Samios. I'm the Director and Fund Manager here at Hermes Capital, and I'm your Lunch Money host. So a very warm welcome. Just a reminder to share, like, subscribe. Subscribe to us on YouTube or on Apple or whatever podcasting platform you might be using. Today we're going to talk about the construction sector and specifically subcontractors within the construction sector. Our topic for today is if you build it, will they pay? This is episode 25 of Lunch Money, and when we first started out, no one was really sure if anybody completing any work was going to get paid. And we commented at the time, when in those early episodes, that I look out on Botany Road here, and certainly we could see the subbies going up and down the streets, and they seem to be continuing to do their work. When I say up and down the streets, in their utes and etc. And so certainly construction sites seem to remain active. We're well into this thing now. The moratoriums are being extended, JobKeeper's being extended. Victoria is in lockdown, so it's a good time for us to once again check in on the subcontracting sector. I've got two excellent guests to help us focus on that sector, and our first guest is Anthony Igra. G'day, Anthony. How are you going?
Yeah, good, Nick. How are you doing?
Very good. Anthony is the director and founder of Contractors Debt Recovery. He was with us episode 4, 21 episodes ago, believe it or not. Anthony helps construction contractors get paid using the Security of Payments Act. What's hitting your desk lately, Anthony? How have things changed and morphed since we last spoke?
My head's hitting my desk.
Right.
It's very interesting. So we had up until June, I think the busiest 6 months we've ever had in 14 years since we've been going. It was out crazy, and for very, very big amounts. A lot of high 6 figures into 7 figures. And we've actually recovered just under 4.2 million since March. Wow. If I take March as the COVID start point of where it all went to hell, so March to September, we've only beginning of September, but 4.2 million in payments recovered. So two things. Number one is the flavour of the subcontractors has changed. Up until in recent years, no surprise, a lot of them are for multi-apartment residential developments. They've really receded into the background, and what's come up at the front is infrastructure, large engineering, communications, subcontractors in those areas, and a few head contractors in those areas, and for bigger amounts. And people are still, the money's still there. People are still paying on decisions, thank God. But the other interesting dynamic is, I think the time that people are chasing has come down drastically. Normally, people sod on the phone to me 6 to 8 months after they've finished the work. That's a long time. And Absolutely. now 2 months or less. So I think the uncertainty of COVID has come to the fore, and a lot of these contractors are thinking, number one, can I really afford to wait? What is in my sales pipeline? Will I get paid for that? And will I have work by Christmas? And what about early New Year? So they're looking at their debtors, their current debtors, and saying, well, I may as well chase these, which they should be doing all the time. But I think that's really the big changes I've seen so far.
Yeah, I mean, I've always said you earned it. You shouldn't be shy about asking to get paid. If you did a good job, you should get paid for that work.
Oh, unbelievable. Sometimes they go, I thought I should probably chase it, as though it's a bad thing that they're chasing the money. To which I usually say, can I have it?
Yeah.
Clearly you feel bad about getting paid. I'm happy to step in.
I guess one of the things, of course, they're always worried about, if they're doing work for one of the big firms, they're always concerned that if they make too much of a noise, that they may miss out on the next project.
Yeah, that's rubbish. That's it's like the thing. You'll be blacklisted. There is no blacklist.
Yeah.
That's nonsense. That you get paid today. I mean, bird in the hand. You've done work today. Get paid today. Don't go wanting today on a promise of the future, because very often they're not gonna place any value on you not chasing your money or behaving yourself. they're going to just see, well, who's the cheapest for the next project. So that doesn't make sense.
You were saying there that people, maybe they had the luxury to sort of sit on something for 6 to 8 months and hope for the best, but maybe the bank balances are a little bit lower now and they don't have that luxury. Is that what you think it is? Why they're coming to you sooner?
Well, that's right. I think they had a number of cash flow coming in from multiple projects. They've dried up. Now you've got cash flow for 1 or 2 projects, an uncertain sales pipeline in the future. I think that's what's probably driving it.
Yeah.
So I mean, it was so crazy, and I'm not complaining because it was good. I mean, it's very quiet now, but we were submitting 4 or 5 applications a week.
Yeah.
And more. Fantastic. I mean, that's madness. That's out of control. But I mean, that's really probably what it should be all the time, given the payment disputes that are out there.
Well, I should add that, I mean, you've been doing this for 14 years, so you've certainly seen the good, the bad, and the ugly. We'll just put you back in the waiting room there, Anthony, and we'll introduce our next guest. Our next guest is Michael Caspaney. G'day, Michael. How are you going?
Good, Nick. How are you?
Very good. Michael's a principal at Menzies Advisory. They're an insolvency and restructuring firm. Now, you're in Queensland, you're in Brisbane, but you do work up and down the eastern seaboard, as I understand it.
Yes, that's right, Nick. I have liquidations in Melbourne, Brisbane and on the Gold Coast. So,
And I know that insolvency has been a little bit quiet. What sort of stuff's hitting your desk the last couple of weeks?
Well, my office is actually on the Gold Coast, so there's franchises, obviously, that have been affected by tourism. There are always building companies and subcontractors who've been affected, and the general position with those is that they were probably gone before COVID came in. Right. And the directors have, we speak to them, and the directors have made a call because COVID has probably made it a little bit worse. But the jobs that are coming into liquidators at the moment, obviously, that they've got fatal problems, and even the government money isn't helping them.
No doubt about it. I notice, obviously on topic today, we're talking about subcontractors, and you were a member of the ATO Small Business Fix-It Squad for the building and construction industry. Just talk us through that.
Yes, Nick, that was a few years ago, and the ATO was trying to be proactive to see what they could do to get the industry together. And it wasn't a talk fest. It was actually quite proactive, and it was based in Brisbane. And at that stage, I hadn't done too much work in Queensland, but I was very impressed with how the QBCC up here, the building regulator, actually needs to. If you're a landscaper or a builder or anything in between, they require you to have a license. And they have minimum financial requirements, and those types of things are good for subbies if they're looking to use a builder. The subbies look on the QBCC website, and they'll effectively say that this builder has passed his minimum financial requirements. I believe they have to do that once a year, and I think that works. Obviously, with everything. And it came out in this ATO workshop. The ATO person who spoke about this, he said all of the problems come from about 5 or 7% of the taxpayers. And I think that's the problem with everything. The ATO's debt recovery is with 5 or 7% of all taxpayers. And I think that's the problem with subbies and builders as well. So.
All right. Well, I would like to talk to you a little bit about the QBCC and some of the regulations that you have there in Queensland. What I will do first, though, is I'll bring back Anthony, bring us all together. Now, we do have some footage of a bunch of angry subcontractors on their way marching to a creditors' meeting. Is that ring any bells, Michael?
They're very well dressed, Nick.
Yeah, they are. I think that might be some old footage there.
Tell you, Queensland's slightly behind the times.
Yeah.
Looks like some of the ones that came to one of my meetings, Nick.
Now I know, Michael, there is some benefit in subcontractors getting together when it comes to recovering money, and you've had some experience with that.
Yes, and I've tried to help the subbies people because they have a really good association where they have a website and a lot of the issues are developed. And one of the things that I would really like to be proactive about is to get them together. And I've suggested this to a government task force in Queensland that was sort of convened because of a lot of problems in the building industry. And one of the things that I've suggested is that maybe with blockchain or something like that in the future, all of the subbies could submit their debtors ledgers, and then some central point might be able to work out, all right, this builder has started to become slow, and if thousands of subbies are contributing to it and their debtors ledgers are showing that one or two builders at the time are dragging the chain, it might actually help them to be proactive and be a force as one and say to their members, right, XYZ builder, he's not paying us at the moment, so we might collectively have a talk to him. And I think proactive things like that may help the industry, because all the time it's just the little guy, his wife's doing the books, he's on the tools all day. They don't have time to worry about, if someone's not paying, they just have to get up and go to another job tomorrow. And that's how they work.
Anthony, do you ever have subbies coming together on claims, or is it normally? I imagine normally to be one at a time, but are there times when the chippy and the sparky need to get together?
Well, they can't. The nature of the Security of Payment Act, you one contract, one claim, so you can't claim at the same time. But certainly, building sites are their own little ecosystem. So if we're successful for one subby, we tend to get a couple more from the same job,
right?
And the same site. What's definitely true is they're certainly aware of each other's debts, and they certainly talk to each other about who owes what. And I see it, like I can tell you, because we get the calls, another call for this builder and another call for this builder and another call for this builder, and it ebbs and flows. And they, there are some builders out there that I really should send a thank you card. You put my kids through prep school. Thank you so much, because it does come in. It comes in waves. But the question is, just because they all know about it, what subcontractors want is they want the airtime, they want the publicity.
Right.
They want it out there saying these people are not paying us. And I think Michael could understand the anger of, they've actually essentially done nothing wrong, then fulfill their contractual role, and are now finding themselves totally out of pocket. I can understand the anger.
Yeah, well, they can get very angry. As a matter of fact, we've got some footage here of a subby trying to collect money, not doing it the way that you do it, Anthony, unfortunately.
Where's the money, Lebowski?
Yeah.
I didn't know you hacked my computer there. The respondent being the dude.
Yeah, exactly. I mean, the trouble is when things get desperate, people do desperate things. But hopefully they come to you, Anthony, before. I guess maybe if they don't have one of your site diaries and make sure that they're tracking their claims, maybe that's what they have to resort to.
Yeah, well, you don't hear much of that, because when that goes on, the nature of it is you don't hear about it. But I have to say,
I am in jest, of course.
No, yeah, I know. But knowing what I know, I am amazed. There are some regular offenders out there. I'm amazed they're still walking around. I just can't believe that no one's taken them out, because I know how much they've owed and to how many parties and to who. You just really got to scratch your head at the gumption of it.
As I guess you were saying a little bit earlier that the nature of the work that you're seeing, Anthony, it's morphing from the apartments maybe more to infrastructure. And I think that, the government, all the governments around the country, as they try to stimulate the economy, there's certainly going to be more infrastructure projects. They're going to bring forward the roads and the tunnels and all the bibs and bobs. I mean, are there any regulatory impediments that you see, say, starting in New South Wales, that that the government needs to fix up to help subbies get paid on those projects?
Nothing regulatory other than to be interested. So
Right.
Here's the great irony. You've got the government passing and upgrading security of payment. They're into secure, they're supporting secure, they're passing legislation, they put infrastructure in place to run claims, etc. The same government will have ministers commissioning capital works, give it to a head contractor and say, let me know when I can cut the ribbon.
Right.
Now, between
right.
appointing the head contractor and cutting the ribbon, there's a whole long conga line of carnage going on.
Yeah.
For a government project, the same government that's trying to support security, because again, no transparency, no visibility.
Yeah, it's interesting.
I think every now and then a minister should say, bring me a list of the subcontractors on this hospital, on this whatever, and I'll call them.
Do you know, I remember with the GFC, it was building the education revolution. And you remember that?
God.
I know, I'm sorry to, I brought back some nightmares, but there was
something.
Yeah, but there was the work went to these head contractors, and then they'd give it out to the subbies, and of course, the margin in it for the subbie was nominal at best. But there were some cases. I don't really want to name names, but I know that one of our regular viewers ended up as financial controller with one of these large mobs, and they talked the government into paying them up front. And then they went into liquidation. And of course, no one got paid. Michael, do you have any sort of bad memories of that project? I mean, I guess when we think about the way the government's going to try and stimulate the economy, what traps do they need to look out for when it comes to making sure that the subbies, who are the ones that are creating the jobs at the end of it all, are getting paid?
The government money is definitely helping businesses, and the level of companies going into liquidation is down, say, 50%. So I think it's positive that the government is doing that, and everyone's screaming about having to pay it off. I think the economy is a lot better off with the support that the government is providing. And as Anthony said, the number of apartments in Brisbane, Sydney and Melbourne has peaked, probably peaked a year ago. And I think the oversupply has meant that, that there's not too many new projects coming online. And I think the governments are doing a really good job about stimulating the economy, and that they might be learning something from the US, because they're talking about bringing forward tax cuts. And I believe that actually helped the US economy, because those businesses thrive because they had money to invest. So I think it's a positive thing if the government can help people. They're definitely helping them, because when it runs out, there's going to be quite a bit of carnage. But I think that the 95% of businesses that are going to survive after this are definitely a lot better off because of it.
I've got I do have a news headline here. I'm not sure which one it is, but there was talk of, we've got this home, where is it now? The home builder scheme, which is for first home buyers, first home buyers, but people also renovating property, their residential properties. And I think it's the Master Builders Association are saying that the government should look at extending that into commercial property as well. I wonder, Michael, in Queensland, you have to have a license, right?
Yeah, through the QBCC, that's correct.
Right. And then if you've had an insolvency, you lose your license. Is that right?
Yeah, you do. Queensland is a little bit sort of easier than Victoria, because in Victoria, they've got a zero tolerance policy. You can get a license in Victoria, but the warranty insurer won't deal with you unless you've paid all of the personal guarantees on all of the repairs that the insurer has done. they won't
Right.
actually let you have any more insurance. In Queensland, it's not as harsh as that. I think the QBCC suspends a builder automatically for 3 years, and then that allows him to come back into the industry, once he's served his time. And it's
3
like
years later.
COVID. Yeah, it's like COVID. The states are their own, that they govern everything differently. Even though we're in Australia, there's all of these different regimes. I believe that the QBCC system is very effective, and it does provide the reputable people, as long as they're putting the right numbers in, the subbies and all that are being benefiting from going onto the QBCC site, seeing that this builder has actually satisfied the minimum financial requirements, and they can have a little bit of comfort. It's when the builder starts doing dodgy numbers to the QBCC that there's problems. But as the ATO said, that's only 5 or 7% of all of the people.
Michael, there you may be aware, or I don't know, but for example, in New South Wales, there are independent companies that do financial assessments of companies before they're allowed to do government work. I mean, why wouldn't the QBCC commission those guys rather than, because they would be disinterested and want to get the numbers right, wouldn't they?
Yeah, that's right. There was a lot of interest in consultation in Queensland. A guy by the name of Les Williams, he's Subcontractors Alliance, and there's another one called Subbies United. Les actually was really proactive. He got a task force done with a retired judge. But unfortunately, the Queensland government is in election mode, and all of the things that Les activated have all died. They've just died a natural death without any action happening. And I think that's a poor sort of summary of all governments. They only have 3 or 4 year terms, and in the last year they don't do anything proactive that's going to affect people adversely. But I think after the next election, there's a possibility that those task force people that Les spoke to might be able to do something. And I've told them that I can certainly help the subbies guys be proactive about getting money. It's hard for them to have security if they're installing, if they're a plasterer and they get on the PPSR and they secure it, the security is worthless because you can't go in and pull it out later. So they do have a problem with obtaining security, just through normal fixed and floating charges or whatever they're called these days. But, it is very difficult because I think we were talking before this meeting started. If a subby is going to scream and shout about not being paid, there's so many other ones out there. The builder is just going to go to the next plasterer if this guy screams too loud, and I think they do feel intimidated about that.
Yeah, I mean, I guess the first thing is to we've got to assume that the quality of your work is good in the first place. You don't want to be like this guy. Yeah, I don't think even.
I thought I saw David Chandler enter the frame just as
I don't think even you, Anthony.
The private certifier had just handed over the OC on that one.
Yeah, right. Just in the nick of time. Yeah. I don't think even you could help him. I mean, Anthony, what I think that we're seeing a bit of a trajectory with this COVID recession. We had, I think there was a distinct phase prior to June when people were completing projects, and you said yourself you were busy, and now we're entering into this sort of longer, protracted period. I mean, are your clients, obviously you see them when they're chasing money, but are they? You said before they're a little bit uncertain about what sort of projects they've got coming up and what work they might have in the pipeline.
I think the word is uncertainty.
Yeah,
like uncertainty, and also if you've got a good contract, this is another thing I've seen. So clients often come back to me and say, here's the contract. Anything jump out at you? We'd really like to take this job on. And the contract is the most draconian. I mean, it's from medieval. It's from the Inquisition, right?
Yeah.
And but they still want to enter into it, and that's a sign that there's less and less good contracts floating around out there.
Right.
And they need to keep people working. They need to keep going. So they're probably minded to take it. I think uncertainty is definitely the key going ahead. I actually think when we click over into 2021, psychologically, the mood's going to go up. I reckon.
You think?
Yeah.
Yeah, I've got good positive views on that as well, Anthony and Nick, because with the government money coming in to help builders, the home scheme, I was reading earlier in the week about take up of land in Queensland is quite rapid at the moment, because people are buying the land so that they can qualify for the 31st of December to have a building contract to get their $25,000 or $40,000. So I think that's positive, and the industry, if it wasn't there, those people probably, some of them may not have decided to build a house. So if they're getting numbers out of that, it can only be good.
I wonder, Anthony, you were saying before, and I'm just tying together something Michael said there before, you're saying that you've got people, they're coming to you because they've got a contract, and they're saying to you, is there anything that leaps out to you about this contract? Now we also think about what Michael said there a little bit earlier, that there's the concern that, they're not the only plasterer or roofer in town. I mean, what advice do you give to that person so that they don't, they still win the job, get the contract, but what can they do to maybe not make too much of a nuisance of themselves so that the head contractor goes to the next roofer, but at the same time try and lock down a little bit?
Well, I would contest your underlying assumption that these contracts can be a source of cash flow for your business. They can be a source of going into liquidation. They're a double-edged sword. So you must always be protecting the downside and put out of any concerns about being difficult or not contesting the contract. Put that out of your head. Your responsibility as a small business person is to your business, to its employees, to the business's cash flow, and protect the downside. So if there's something in a contract that is just going to kill you, you are better off with less revenue rather than the risk of that thing just sucking the life out of you and sending you under. And you know what? We quite often do contract reviews for clients. We're not lawyers, but we say, look, based on our experience on payment disputes, this is where we think there's going to be conflict in the future, and here's what's unreasonable. And they've actually gone on and actually got the job. Yeah. Because they've gone in early and with a reasonable tone said, look, these are things. And you know what? A lot of builders accept that a lot of the provisions are crazy, and if you get a bit of pushback, it's okay. But definitely don't speak out and get advice from whoever, and come back with suggested changes. And remember that a contract can be glory, but it can also be guts. It can be both those things.
Can be guts or glory. Michael, we were saying a little bit earlier that Anthony sees them at one end of the spectrum. Obviously, you see them at the other end of the spectrum when they've run out of cash and entered into a formal insolvency. Is there anything that you see a company and you go, you know what, if they'd only done something different with a contract, I might have been able to save this one? Is there something that a common theme that you see?
I think rapid growth is one of the biggest problems with building companies. It's economics 101. If you have rapid growth, you need to have the required working capital. And a lot of people, they want to get bigger and bigger, but they don't understand that if they want to do 60 million a year, they need X amount of dollars. And one of the criticisms I do have of the QBCC numbers is that the net tangible assets, for example, their criteria says to do 60 million a year, the builder needs to have net tangible assets of only 2.4 million. Now, in my view, Yep,
That's bad.
and that is one of the problems. The coefficient of how they work it all out needs to be. They need to have a higher bar there, and the ones that end up in my office, even the ones who've genuinely satisfied that net tangible assets, if they've had rapid growth and they need to do, say, a $30 million contract, the 2.4 million working capital is never going to get them there. And I think the builders, they're actually think they're okay, but the creditors blow out, and then I'm appointed because they just didn't have enough working capital. They do their estimating right, they do their contract administration right, but the company goes down because they can't pay their creditors on time.
That wouldn't even cover 1 month of just long lead time materials.
Yeah.
I reckon to do 60 million, you need at least 10.
Yeah,
I think that what's interesting is that surely it depends on the nature of the contract as well. If it's going to be capital intensive or labour intensive, sometimes, if it's going to be labour intensive, it's a different matter. If it's going to be, if it's going to be capital intensive and it's all about the machinery working, I think that's a little bit different again. I'm interested, Michael, in Queensland, because you lose your license if you've been through an administration. I mean, how do you come out the other side and keep trading?
Yeah, well, there's very few that come out of a liquidator's office in a deed of company arrangement or anything like that. Once a builder loses his license, he has zero ability to go back on site, because the QBCC does not allow him. He doesn't have a license to go back onto that site because he's lost his registration. They tend to suspend registration of a builder if there's so many creditors chasing them, but there's no coming back. It's fatal, because it'd take the builder 6 months to convince the QBCC that he might be able to get it fixed, and in the interim, the site is just going to deteriorate. And as everyone knows, once you stop working on a site and the weather gets to it, it just loses all of its value. So, yeah, the second chance with a VA and a docker just doesn't happen in a building company unless someone can go in there 3 or 6 months before I get there and get all the ducks in a row, have all the contracts novated, and work on that part of it. But I don't think builders have enough sort of foresight into that, because all they're doing is putting out fires. For them to be proactive about having a second go, they need to do it over a 4 to 6 month period.
Well, maybe they need to collect, have all their progress claims and retentions collected and avoid the insolvency in the first place. Anthony, I guess in Queensland, obviously, the restructuring is made more difficult because of the QBCC. I mean, do you think, is phoenixing still a problem in New South Wales?
Oh, yeah. Yeah, you can see that it's become fashionable because, builders will set up separate companies per project. That was only happening every now and then a few years back, and now it's rife. Yeah. So they will set up a company, run it to practical completion, and then kill it. And, you said we're seeing more and more of that. And it's kind of obvious in the name of the company, but subbies aren't attuned to that.
Yeah.
They also, a lot of businesses will have interrelated entities and entities with same directors all working out of the one office, and they just ping pong the money around. And I've actually even had applications where the subcontractor was engaged and paid for by company A, and then it gets to adjudication, and then company C steps in and going, no, they're actually in a contract with us, and here's our spaghetti diagram of our organisation.
Yeah, I think it's one thing in our business when we look at funding invoices, who is it that we're really dealing with? And as you know, it's very easy to disguise an SPV, a special purpose vehicle company. The whole purpose of an SPV is, you can sink it. But sometimes it might be XYZ company is quite a respected company, but then all of a sudden there's XYZ New South Wales or an XYZ New South Wales number 2. And they're certainly the warning signs.
Yeah, you know what? And if you look at some of those ASIC extracts, you look at the director, and you've got we haven't even touched on this, dummy directors. So I had chasing a company, and I pulled up the extract, and new directors had been appointed in the preceding month, and the one of the directors was 89 years old, another one was 92 years old.
Wow.
So someone's grandparents have been slung a few bucks.
That's terrible.
They're dummy directors. The principal place of business is now a company where you pay to have an office address somewhere, dummy office. And I actually said to my client, I'm not even going to start on that. You're going hiding to nothing on that one.
Yeah. Well, they should have asked you to check it out in the first place, guys. We're actually out of time, believe it or not. We're well past the 35-minute mark, so we're going to wrap it up there. I'd like to thank you both, Michael Caspaney from Queensland and Anthony Igra from here in New South Wales with Contractors Debt Recovery. Thank you very much for joining us. We really appreciate it. And thank you to everybody.
For the opportunity, Nick.
You're very, very welcome. Thank you to everybody who's been watching us live, and thank you to everybody who's been watching us in catch up or listening to the podcast. And we hope to catch everybody again soon. Cheers.